Okay, great. So what we want to focus on tonight is looking at some alternative ways to view the market using, I'm going to show you two tools tonight that you can use. Just a little review. Last week, we talked about using VWAP. How many of you used that over the last week? Put a 4 in the chat if you used, started incorporating, or at least start doing some back testing using VWAP. Did anybody do that? Anybody use VWAP? Give me a 4 in the chat if you did. Okay, maybe nobody didn't. That's fine. The VWAP is a great way. It's a great day trading tool, along with using the high of the day and the low of the day to make a determination of overall direction of the market for a particular session or sessions. Okay. So it's a great way. Plan to try it. Okay, no problem. So look on last week's video for anybody want to catch up on that, on using VWAP and high of day, low of day. That's an easy way just to catch where the direction that the market will do over the next couple of hours. Okay, it's really a day trading strategy. So I'm going to show you something today that I think will be of some value, and another tool that I am using. Hold on one second. Another tool that I'm using in this crazy market space right now. And if y'all see me looking over to the left, my daughter's rabbit is loose and around. So y'all forgive me. Give me 1 second. Okay. Share the screen. If y'all can see the screen, if you would, please give me a 9. If you can see the screen, I want to make sure everybody can see the screen. Okay, great. Thank you. Okay. So we see a couple of things here. See a couple of things here. Does anybody know what this is down here at the bottom? Anybody know what this is down at the bottom? Anybody know? Can anybody know what that is? Without reading. I should have covered it. This is ADX. Okay. This is indicator that is free, is included with I'm gonna say TradingView with MT4. Okay. It stands for average directional movement. Okay. Average directional movement. All right. And it is a type of oscillator, but it tells very specific information. Okay. So I'm gonna go into the settings of it. Okay. Well, first let me show you where you can find it. Okay. You're gonna go into settings. You're gonna go into the trend section, and this is the first one: average directional movement index. Okay. So if anybody has yours up, you can pull that up with me. This is a great tool. It gives a lot of great information. It looks like a bunch of squiggly lines, but once you know what these lines mean, it makes a lot of sense. Okay. So we always want to keep our parameters at 14. We want to apply the close. And we want to turn our the style of the ADX. This is really the ADX right here. Okay. And I put a thickness at 2. Okay. The next tab is called colors. Colors tab has a plus DI and a negative DI. Okay. Can somebody tell me what plus DI means? Just educated guess. Anybody know what the plus DI would mean? Yes. Both of y'all correct. Positive direction, bullish, buy, all those things, whatever you want to call it. Okay. Positive means going up, negative means going down. Okay. So basically what this does, this shows the direction that money is flowing at the time. Okay. Money is flowing negative right here. So the one on top is the direction that money is flowing. Okay. One on the bottom is where money is not flowing. Okay. So whatever you see one on top. So in this particular case, let me close this off. As you see in this particular case, you see that the red line is on top. That means there is bearish action in the market. And let me zoom out a little bit, and you can see at the same point where there is bearish momentum in the market, look at what's actually going on. We see downward movement. Y'all see that? Okay, let me get my annotator out. You can see bearish movement in the market. At the same time, we see an increase in bearish momentum. That makes sense? All right. So this is not RSI, so let's not get that confused. It's an oscillator like it, but it measures different metrics. Okay. So let's look at a bullish example. All right. We see green, we see green, we see green. And then lo and behold, what do we see? At this point, we see bullish momentum in the market. Okay. As long as green is above red, we have movement. Okay. Now, as we can see right here, we see it crossing back and forth. Green is up, green is down, green is up, green is down, green is up, green is down. So what is that consistent with? Somebody type in, what is that consistent with? If green is up, green down, green up, green down. Green, red, green, red, green, red, green, red. Somebody tell me what that means. Y'all know it. It's not a trick question. Boom. Consolidation. So as you can see all this green, red, green, red, green, red. Look what we have here. Okay, consolidation, a SpongeBob, or whatever you want to call it, right? And when it finally breaks out of that green, red cycle, look what happens. It breaks out right here. Y'all see that? So now we're starting to look at, and we're starting to see some things where some of the things that we can see with our eyes, as well as some of the instruments we've always used, that they're starting to all tell the same story. Okay. We can see green, red. It's noisy right here. It's noisy right here because it's noisy right here. Okay. So we will wait until it breaks out of that noise. We wait until it breaks out of that noisy place. I'm sorry, guys. We would want to wait until it breaks out of that noisy place. And when it does, now we have good movement again. Okay. So that's the kind of thing that it tells. Okay. But I'm not finished here because we said nothing about this white line. Okay. Can somebody give me just a good guess what this white line represents? And this is the real ADX. No bad answers, guys. We're just trying to, I don't want to spoon feed you. Volume. Yeah. It's in the mix. It's in the mix. What else? I think volume is definitely momentum. Yes. You're all kind of all synonymous. You're saying the same thing. So anybody else? Anybody else? No, it's not directional. It's not directional, but good. You would think it is. Most oscillators are directional, but this one is not. The white line does not indicate direction, and I'm gonna, and you'll see in just a second why. But good guess. Normally that would be the case, but not this one, and that's the reason I'm breaking it down like this, so y'all know the difference. I'll go ahead and sum it up and what y'all were hinting at. Not only does it measure volume, not only is it giving you an indicator of momentum, but it's giving a measure of strength. Okay, strength of trend. Okay, strength of trend, which includes volume, which includes momentum, and all and things that are like. Okay, so now we can tell a story by looking at these lines. Let's look at this particular space here. I'm gonna do a vertical line. Hold on, let me get rid of my annotator. The vertical line, and I'm going to do it right here. I'm gonna move it over just a tad. All right. We already know from the oscillator here that it already has broken structure. That's right here is where it broke structure. So it broke here, but doesn't mean it's ready to go yet all the time. Okay. So let's look here as we zoom in here. I just want to zoom in a little. If we zoom in here, we see that the green has broken above the red. It was kind of teetering and tottering, but now it finally broke out of that little range here. But look here, it's not, as let me get my annotator out. As we look right here, this is decent, but you see this dotted line? This dotted line is called the midline, okay? And the midline is set at 25, okay? So for anybody setting yours up, the midline is set at 25, and this is how you do it. Let me go in and show you guys. You want to go to levels. You want to add a level. I already added it. You want to add a level, and then you want to type 25, and then it'll be silver and dotted and so forth, okay? So I won't do it again because I already have it. But you hit add level, you type in 25, and it shows a dotted line. Okay. Now, here's what this is saying. We have bullish momentum in the market, and it is confirmed by these candles and the green line and that. Okay, we got green, green, green. But it's not until right here. Let me get my annotator out. It's not until right here where there is enough volume to support the bullish direction. Does that make sense? If that makes sense, y'all give me a 10. Because I'm going to go deeper. So I want to make sure. Give me some 10s. Give me a 2 if that doesn't make sense. We got 2 10s. Okay, got a 2. Let's rewind it back. All right. No problem. No problem. No problem. So let me erase all, clear all drawings. These red and green lines represent direction. Yes, correct, correct. So I'm going to start from the beginning. These red and green lines indicate direction of price or money flow, okay? All right. The one on top is the predominant direction of the market. So as you can see, this one is vastly above, and as we can see, it continues to be above, okay? Right? So this white line represents strength of trend. Okay. You have a weak trend, you have a strong trend. It could be bullish, but it could be weak bullish. Okay. It could be bearish, but it could be weak, or it could be strong. As you can see right here, and let me erase this because I got a little too wild with my squigglies. All right. So as we can see right here, if this is all I had on the screen with no other candles, no indicators, I could tell what's going on in the market because I know there is bullish momentum in the market. And because it's above the 25 dotted line that we set, the level, there is strong momentum in bullish direction. So I know at the very least, I'm not taking sales. We got other things like all this green is letting us know too. But I know to do not take sales. Okay. Now, this tells you when to get in good trades, and it all tells you when to stay out of it. Let's look right here. Y'all see this red line cross over the green? Technically, now you won't know all this stuff is going to happen yet. Technically, red is over the green, right? So somebody say, hey, let's buy. And guess what happened? It did go down some. Look at this. But that's a counter trend. Why would you get into that? That is not high probability. Did it pay you some? It did, but that's too risky. When this is already telling you we're clearly in the uptrend. We're clearly in the uptrend. So that's when this gives you the macro look at the trend. This gives you the micro look at the trend. Does that make sense? Macro versus micro. That makes sense? Give me a 12. When I say macro versus micro. Okay. So give me 1 second, guys. So in this particular instance, so this is what this means. This is beautiful, guys, because even looking at this, we'll know it's an overall bullish trend, correct? It doesn't even matter what the indicator. It can be my indicator, it can be Uncle P's. One of the greatest things that I had a problem with is when I missed the initial entry, right? I missed the initial entry and I'm like, man, I want to get on this trend. I know this is going to be strong, but where do I get in? Where do I place my stop? Particularly if I'm like right here in the middle. Like I'm too far from the beginning, so I can't base it on that, but I'm not quite up here. And so this is beautiful because this is what, when I look at this is what all of this tells me. Okay. And I want y'all to start looking at things and let it tell you a story before we leap into and commit to things. Okay. I know that I'm in an obvious bullish trend. Okay. And we all know that within trends, there are what? There are higher highs, right? And there are higher lows. All right. Meaning price is going to come up, it's going to breathe a little bit. Then, but we're going to make another higher high. Excuse my kindergarten writing. And we're making higher lows. Here's what we don't want to do. I don't want to buy right here. I want to buy right here and get in on this trend. Does everybody agree with that? If you agree, give me a 2. I know we used a 2 before. Just give me a 2 now. Would it be better to get in here or here? Okay. Now, did it still make you some money? If you would have got in right there, yeah, but what if you were able to pinpoint this? Okay. This is you're buying the high right here. You don't want to buy the high, you want to buy the low. You're not going to get this price anymore, but you can get in when it comes back. And if you look right here for this one, let me erase all this jibber jab. If you look at this low, look at what you found right here. And I'll move it over to the side. We see that the green has crossed the red. It's above it. And look what we have. We have momentum over the 25. So this would be a great place of entry. Okay. Because we have the direction and we have the momentum to support it. And as you can see, if you had gotten in right there, you're talking about probably getting in right here, put your stop just safely below that. It could have been, could have been 60 pips, but look how far this is on the hour time frame, guys. So even if you'd have wrote it up to that point right there, 60 pip stop, 180 pip take profit. That's a 3-to-1 trade. Okay. And we haven't got any arrows. There's no bells. There's no whistles. That is just waiting on price action to come. And you literally knowing you already come preloaded with this knowledge. We're in a bullish trend. I'm just waiting for everything to position in the right place. And even the price action told you this. Okay. Look at the price action here, guys. See that strong rejection? That's great price action letting you know, hey, I came down here and I don't want to go down. There's strong action pulling up. And it matches here. And it matches this. And we already know it's already in bullish territory. Okay, explain 3-to-1. What I was just saying is, had I gotten in right here, let me start my drawings over. Had I gotten in right here, and my stop loss right here, if you measure that, the distance of my stop loss will be roughly, I think before I measured, it was like 60 pips. Okay. It's not the exact location, but y'all understand what I'm saying. It's getting herky-jerky. Hold on. Well, it was right here, guys. Y'all have to forgive me. The thing's acting funny. My mouse is acting up. Okay. So this area right here and stop loss under that low is roughly about 60 pips. Okay. So I'm risking 60 pips. And if I took it up to this high and I measure that, being if this was my entry, it went about 180 pips. Okay. So I risked 60. I would have made 180. Okay. That means how many times does 60 go into 180? 3 times. Like 3 times 6 is 18, right? You just add a 0. So I risked 60 for a target of 180, meaning that I risked one. Let's say if I risked 1%, I got a 3% gain. So I got 3 times my risk. That means 3-to-1. We only want to get in trades that are at least a 2-to-1 trade. I think it was one of our first weeks. We talked about the benefits of doing high risk to reward. It requires that you have to be less accurate because for every one you lose, with the one you win, it more than covers your loss. Okay. But as y'all can see right here, there are plenty of re-entry opportunities. All right. So I don't want to cherry pick. So I'm just going to pick some stuff. Let's look at EU. I'm just looking at some stuff at random. Okay. And here's the great thing about it. Here's the great thing about it, guys. I'm looking at this on the 1 hour. Okay. This works on any time frame, but the reason I started here on the 1 hour, because I want you all to start looking at this in higher time frame perspective. Okay. Let's look at a bearish example. All right, we see rejection of the daily and the 4. Y'all see that? We see this turn red. Let's look to see what we see around. Okay. Now this is, y'all know by now that this is my true trend indicator. Do y'all still have access to that? I made it available to everybody. Okay, do y'all still have access to that? I haven't heard it from anybody. I tried to extend everybody so you wouldn't have to keep re-upping. Okay, are y'all using that? Okay, I'll renew you. Remind me. Okay. Okay, great. Anybody who has expired, please let me know and I'll renew you. So this was pretty spot on. Okay. Now, technically, this is when bearish momentum entered into the market. But as you can see, it was descending and there was not enough strength in that trend to hold. So as you can see, it was kind of herky-jerky. It wasn't until it got here. Y'all, please forgive me. Wasn't until it got here. Well, the bulls are clearly in charge. I'm sorry, guys. Well, the bulls are clearly in charge here. Now, but now we've got momentum to support it. Y'all see that? But we had not truly broken a structure yet. Even though it was going down, it was making lower lows, as you can see. If I look at this, I'm making lower highs, lower lows. Y'all see that? Lower highs, lower lows. You can see it happening. High, low, lower high, lower low, lower high, lower low. So technically, it is making lower highs and lower lows, but it's not until it breaks structure, and this is where structure technically broke right here. That's the reason these different indicators measure different things. This is where structure technically broke. And when it technically broke, now let's look at it. We've got bearish direction with strong. The further it's away from this 25 dotted line, the stronger the trend. Okay, so now that will be a great place of entry. Okay, so now we enter. We can put it above this arrow. Now, mind you, this is on the 1 hour. That's the reason everything looks so, you know, the numbers look so huge. All right, put it above that, about 70 pips. But look how far it goes. If you take that all the way down here, That's 330 pips. Okay. Did it go back some? Yes, but did it, you know, it only went back from entry about 20 pips. If you had a 70 some pip stop, it never got you out. Okay. But let's say you missed that. Okay. How about drawdown? Drawdown is inevitable. Inevitable. Okay. You won't always go into profit. You know, again, this is on an hour time frame, so we got to have larger swings going on. All right, but right here is where it never eclipsed this high. Okay, it never eclipsed this high. As you can see right here, this was a high, and this stayed true to the trend of this was a lower high. It came up, but now if this had eclipsed this, then the trend would have been broken, because the law of trends are highs, lower lows, lower highs, lower lows. Okay. It's, even though it pulled back a good bit, it did not violate the trend. And as you can see, within the oscillator, look what happened. That whole time in that oscillator, what did it do? It stayed in negative territory. And what did true trend do? It stayed red. Okay. So this gives you the confidence that even if it's pulling back, if it hadn't turned green, it's still in a downward trajectory. Okay. So this helps us to stay. Again, this shows the macro look at the trend. This shows the macro look at the trend. This shows the micro look at the trend, to where this letting you know, hey, if I'm only in it to ride it for like until the next time it pulls back, I know that this is my entry. And then, all right, no problem, bro. And then this, if you're just trying to ride it just to get some pips, this right here will be your exit whenever you see the green cross back over the red. Okay, so you could ride that little space there. Well, this is the hour time frame, so you know, riding there to there, it's, you know, it's about 42, 43 pips. Okay, that's not bad. But you let this make a determination for you as to what is going to go on. What you see is there is good momentum in the market. This is the, let me move this out of the way so y'all can see. As you can see here, this little space here gives us the story. Bears are in control with high momentum. And as you can see this section, you had a good drop here. All right. When the momentum dropped, it consolidated. Look at that. Consolidation. Consolidation. Okay. So I want to show you guys that, just so now the great thing about this is how we can use it in a multi-time frame perspective. Let me clear this out, and I want to show you guys something. Let's go to the 4-hour time frame. Okay, we're on the 1 hour now. Let's go to the 4 hour. And let's just choose another pair. I don't want USD CAD. All right. Okay. So right here, we can see based upon this right here, and let me get another one. Right. This is on the 4 hour. First of all, before we even get going good, we know we rejected 4 hour and daily structure. Now we see right here, we see the bears are in control. And now, if we move here, this is a place where there is high momentum to support the direction that things are already going in. Okay. So you said, well, I don't really want to get in on the 4 hour. I don't really feel comfortable. You can use this space here. Use that space here. See, when it's taking its time on the 4 hour, we know that something is going on lower time frames already. Okay. Now let's go down to the 15. Let's try to find those same little squares. Look at that, y'all. Oh, let me find it. That was beautiful. Is that not a beautiful 415? Look at that entry. Look at that entry right there. Rejection of the 4 hour, gotten in right there. This is your entry. You can put it either above this, might have been 40 pips. You can put it right above the line, that's 30. If you want to put it above the structure, that's fine too. That's 64 pips. Look at this ride down. Even if you just want to go to right here. But it all started knowing, because guess what? The 4 hour told us I'm ready to go down. I'm ready to go down in a bearish direction, and I'm ready to go down with high volume. But I don't have to wait until the 4 tells me that. I have to wait until the 4 comes to full fruition. I can go down to a lower time frame because now I can get in on a 15 with confidence. Because the 4 hours already told me I'm going down for a sustained amount of time. And as you can see, you know, look how much further it went down that you would have gotten in early on this time frame. Let me go to the 30 just to give us a little more perspective. Look how far it went, guys. If this would have been your entry, going all the way down until you see a white arrow indicating daily rejection. Basically 300 pips, y'all. So you're gonna take pretty much like a 40 pip stop loss, going 300 pips. Why do we stay in with confidence? Because going back to the 4 hour, we know. I gotta find that spot. So I'm gonna zoom in some so I can find it. There it is right there. Going to the 4 hour, I saw that it broke whenever it crossed. Some people actually use the ADX. They use the green crossing the red or the red crossing the green as entry. People actually take entry on those because a lot of times there's movement on it. But you literally could have taken this space where it was all, it may have already been, it's established that the bears are in control, but maybe 4 hour momentum is not there. But there is enough momentum on a lower time frame for you to justify to get in. Why do I get in with confidence? Because I know a larger, stronger time frame is pushing me. I just need to find my entry. Okay. When I find my entry, y'all see what happened. It was smooth selling. Does that make sense, guys? That makes sense. Give me an 8. Okay. How many 8s we got? How many 8s we got? How many 8s we got? How many 8s? How many 8s? Okay. Anybody that this doesn't make sense to, we can do one-on-one. But I'm this is on the 4 hour. We can go to the 15-minute in this same space. Let's find that entry. I think we're coming up on it. That same entry right here. Here we go. Oh boy. There we go. The same entry. I am now able. This screen is not want to cooperate me tonight, guys. I'm so sorry. What I wanted to show is that this then provides area where we can get re-entry. Like right here. I see right here aligned with this. Let me. It is just so. I need to restart my machine. It's just jumping. My apologies. But anyway, you can use higher time frame because this works on every time frame. Okay. You just want to make sure you're doing it with the direction. Now, like again, this is telling you the micro view of the market. This is telling you the macro. Okay. Like right here, it broke bullish with high momentum. As we can see, it went there and we had a push that went up. Okay. So the best way to use this is, in my opinion, don't just look at the 5 and the 15 and say, "Ooh, let me jump in." Get a higher time frame. Let's say you want to trade. Let's say you want to trade the 5 minute. Okay. Let's say you want to trade the 5 minute. Let's find an obvious place. That's the reason. Let's say you want to find an obvious place. Let's look at another pair because I've marked up all on this one. Look at NJ. Yeah, my machine is very slow tonight, guys. I apologize. Okay, there you go. Did it change? I don't know, guys. My apologies. This thing is just acting up. It's freezing and everything. But anyway, so let's look right here, even on the 1 hour. We looked at on the 4 hour before. Let's just stay with the same one. Right here, we look at this cross right here. Bearish momentum in the market, high volume. Okay. Bearish momentum because it crossed over, high volume. It's confirmed on the macro level as well as the micro level. Now we can go down to the 5 minute. You say, hey, I just want to scalp today. I'm just looking to scalp. I'm just looking to get some good quick pips. And let me, the ADX is now going to show me on the macro and micro level when's a good place for entry. Okay. And to be honest, this is probably right here a good place of entry. Let's zoom in. It's clear that there's bearish momentum in the market. There is high volume, and we know it's supported by the hour at this point. Okay, so I can with confidence get in right here, put my stop, maybe like 17 pips back, and I got my 1-to-1 right there. Okay, if you wanted to continue, and if I know the hour is backing that up, look how far it ends up going. Okay, here, but let's say you missed that initial entry. Here is another entry, right, about right there. Okay, you got bearish momentum in the market. I'm sorry, guys, this thing is whizzing by. Got bearish momentum in the market, and then when it's bearish, obviously, when the momentum enters there, now you got good easy pips that you can get. Okay, but I don't just go to the 5. I go to the higher time frame to see where the strength is on higher time frames, and then I go to the lower time frame for entry. And then there, as you can see right here, this is very high strength that matches very high strength. Macro, we already know it was bearish. We were just looking for optimum entry where the most energy is. This is where the most energy was, and that was just phenomenally easy pips.